Welcome to a new IFRS Education from Series. It's an initiative of OJ Samuels Accounting and Reporting. Welcome once again to another session. In this session, we shall be considering cumulative set 14 questions to which the answers have been provided on IFRS 18. This is standard on presentation and disclosure in financial statements. Viewers and subscribers have 15 seconds to select or choose the answer to each question. The answer to each question is reviewed after each question. You may pause the timing as you deem necessary. Please enjoy it. Question number 31. Apart from IS1 and IFRS and SIC interpretations, how many IFRS accounting standards, that is IASs and IFRSs, were amended in any of their paragraphs by virtue of IFRS 18 release in April 2024? A, 38, B, 39, C, 40, D, 41, E, 42. Some counts. 5 seconds gone. 10 seconds gone. Time up. The answer to question number 31 is A, 38. A, 38. Apart from IS1 that is replaced by IFRS 18, of all the existing IFRS accounting standards applicable when IFRS 18 was introduced, 2 were not amended by virtue of IFRS 18. 38 were amended by IFRS 18. A is the answer to question number 31. Question number 32. Which of the following standards provisions or paragraphs were not amended upon introduction of IFRS 18 in April 2024? A, IS 20, B, IS 21, C, IS 23, D, IS 24, E, none of the above. Some counts. 5 seconds gone. 10 seconds gone. Time up. The answer to question number 32 is C, IAS 23. C, IAS 23. IAS 23 is titled Borrowing Costs. If provisions or paragraphs were not amended in any form by IFRS 18 or by the introduction of IFRS 18, certain paragraphs or provisions of IAS 20, IAS 21, and IAS 24 were amended on introduction of IFRS 18. C is the answer to question number 32. Question number 33. How many IFRS accounting standards, that is IASs and IFRSs, were not amended in any of the paragraphs by the introduction of IFRS 18 in April 2024? A, 4, B, 3, C, 2, D, 1, E, 0. Some counts. 5 seconds gone. 10 seconds gone. Time up. The answer to question number 33 is C, 2. C, 2. 2 standards were not amended in any form upon the introduction of IFRS 18. They are IAS 23 titled Borrowing Costs and IAS 39 titled Financial Instruments Recognition and Measurement. C is the answer to question number 33. Question number 34. Apart from that contained in IAS 8, the transition provisions on IFRS 18 are contained in what part of IFRS 18? A, Appendix A, B, Appendix B, C, Appendix C, D, Appendix D, E, Appendix E. Some counts. 5 seconds gone. 10 seconds gone. Time up. The answer to question number 34 is C, Appendix C. C, Appendix C. Apart from provision of IAS 8, the transition provision on IFRS 18 are contained in Appendix C. This appendix provides considerations on restatement of amounts, reconciliation, and presentation to be made on the first-time application of IFRS 18 retrospectively in a comparative period. In April 2024, when IFRS 18 was released, Appendix E did not exist. There were only appendices A to D. C is the answer to question number 34. Question number 35. On first-time application of IFRS 18, the reconciliations required are those for the A, current period, B, comparative period, C, pre-comparative period, D, current period and comparative period, E, comparative period and pre-comparative period. Some counts. 5 seconds gone. 10 seconds gone. Time up. The answer to question number 35 is B, comparative period. B, comparative period. On first-time application of IFRS 18, the reconciliation required are for the comparative period. It is so in that the comparative period, which is retrospectively restated by the application of IFRS 18, had been previously reported using IS1 titled Presentation of Financial Statements. Therefore, the restated line items under IFRS 18 for the comparative period are reconciled to what the line items were for the same comparative period reported when IS1 applied. B is the answer to question number 35. Question number 36. Which component of primary financial statement is the focus of line items, restated amounts, and reconciliations on the first-time application of IFRS 18? A, the statement of cash flows. B, the statement of changes in equity. C, the statement of financial position. D, the statement of profit and loss. E, all of the above. Some counts. 5 seconds gone. 10 seconds gone. Time up. The answer to question number 36 is D, the statement of profit or loss. D, the statement of profit or loss. The statement of profit or loss is the focus of line items, restated amounts, and reconciliations on the first-time application of IFRS 18. The principal changes introduced in the presentation in financial statements as they affect statement of profit or loss. D is the answer to question number 36. Question number 37. Restated amounts arrived at by applying IFRS 18 for the first time will be that previously presented using A, IFRS 18, B, IS 34, C, IS 8, D, IS 1, E, IS 1 and IS 34. Some counts. 5 seconds gone. 10 seconds gone. Time up. The answer to question number 37 is E, IS1 and IS34. E, IS1 and IS34. IFRS 8 deals with presentation and disclosure of financial statements. As it supersedes IS1, restated amounts arrived at by applying IFRS 18 for the first time are amounts previously presented using IS1. This is with respect to annual financial statements. Where an entity had prepared interim financial statements and then applies IFRS 18 for the first time, restated amounts arrived at for interim reporting will be that previously reported using IAS 14, IAS 34. Therefore, restated amounts arrived at by applying IFRS 18 for the first time will be that previously presented using IAS 1 and IAS 34. E is the answer to question number 37. Question number 38. The quantitative effect of applying IFRS 18 for the first time is A, not reported, B, reflected in profit and loss, C, recognized in retained earnings directly, D, recognized in equity directly, E, recognized in provisions. Some counts. 5 seconds gone. 10 seconds gone. Time up. The answer to question number 38 is B, reflected in profit and loss. B, reflected in profit and loss. Transiting to IFRS 18 requires that an entity retrospectively apply IFRS 18 to its comparative period. As the effect of IFRS 18 is on the new categorization or classification of income and expenses and the designation of new subtotals and totals in the statement of profit and loss for the current reporting period and comparative reporting period, the effect of applying IFRS 18 is reflected in profit and loss. There are no quantitative effects on any other primary financial statements other than the statement of profit and loss. The quantitative effect in all other components of primary financial statements and elements of financial statements remain unchanged. B is the answer to question number 38. Question number 39. The definition of IFRS accounting standards is contained in A, IFRS 12, B, IAS 10, C, IFRS 18, D, IAS 8, E, IFRS 18 and IAS 8. Some counts. 5 seconds gone. 10 seconds gone. Time up. The answer to question number 39 is E, IFRS 18 and IAS 8. E, IFRS 18 and IAS 8. With the issuance of IFRS 18, the definition of IFRS accounting standards is contained in both IFRS 18 and IAS 8. E is the answer to question number 39. Question number 40. One and some of the following are contained in IFRS 18. A, going concern. B, accrual basis of accounting. C, disclosure of sources of estimation uncertainty. D, all of the above. E, none of the above. Some counts. 5 seconds gone. 10 seconds gone. Timer. The answer to question number 40 is E, none of the above. E, none of the above. Going concern, accrual basis of accounting, and disclosure of sources of estimation uncertainty are found in IS 1 titled Presentation of Financial Statements. On the issuance of IFRS 18 titled Presentation and Disclosure of Financial Statements that supersede IS 1, these terms were located to the amended IS 8 titled Basis of Presentation of Financial Statements. E is the answer to question number 40. That is all for this set on IFRS 18, Presentation and Disclosure in Financial Statements. We hope you had fun. We invite you to subscribe to our channel, share our links, and kindly invite those in your network to do the same. This enable you and all other subscribers get direct notifications on future video uploads. Till we come your way again in another episode. Thank you and bye for now.